The American consumer keeps spending, but prices move ever higher. Welcome to Market Insight. I'm Elena Casas. Consumer spending rose 2.5% year-on-year in the first quarter, a solid rise that bodes well for the US economy. The Federal Reserve's favourite measure of inflation, though, showed those consumers are paying more and more. Core price growth for March came in at 2.8%. So why aren't these higher prices stifling demand? Let's ask Jérôme Martis, Director of Consumer Research at the London Stock Exchange Group. Jérôme, hi. Well, the big question is, American consumers keep complaining that prices are too high in surveys, and yet they keep on spending. What's going on?
So today's numbers definitely shows that the inflation is still sticky. And what's more is that consumers' perception of inflation in the short term and the long term also rose. So they're thinking that inflation will continue to go up. Still, as you mentioned, personal consumption was up significantly, showing that the consumers still engaged. This is in line with our LSAG data that shows that the weeks leading into Easter, consumers tend to go and buy the latest fashion items and pay full price because the discount levels are at the lowest they are compared to last year's averages. What's fueling all this? Well, our LSAG data shows that there's a strong correlation between the employment data and consumer spending. So as long as consumers feel good about their current job situation, they're going to continue to spend freely. And that's what we're seeing. And those are the projections even for the upcoming quarters.
Do you expect, though, that higher interest rates, which have an effect, of course, on people's personal loans and on their mortgages, are going to further squish consumer demand going forward?
So when we look at the forecast for the upcoming quarters, the one sector that has consistently the strongest earnings growth rate is the hotels, restaurants, and leisure sector. Now, this week alone, we saw that Royal Caribbean smashed earnings expectations, and they saw passenger ticket revenue rise 34%. As a result, they raised guidance. So this is telling us that despite the fact that going on vacation is costing consumers more money, they are still willing and able, and demand is still strong despite sticky inflation. So as long as the consumer is employed, we're going to continue to see consumer spending at the rates that we're seeing right now.
In that restaurant and leisure sector, Jérôme, next week we get results, of course, from chains including McDonald's, Starbucks and Domino's, a lot of these big consumer groups. What do you expect from those numbers?
So our Starmind data shows that analysts are bullish and have been raising estimates for a number of companies, mostly hotels like Wynn Hotels, MGM. We're also seeing bookings is likely to post positive earnings and post a positive surprise. But also we're seeing that in terms of retailer names, Gap is receiving a boost from its Old Navy division. Consumers are trying to find ways where they can save money, and that's at their Old Navy division. So as a result, Gap is likely to beat earnings as well. Amazon continues to be a favorite. Shake Shack, a restaurant, continues to be a favorite. So those are the names that we're keeping a close eye for as retailers get ready to report first quarter earnings in the upcoming weeks.
You mentioned there that shoppers are looking for discounts. As prices are higher, are the discount restaurants, the discount retailers being favoured, or is it not as simple as that?
So in terms of the discounting, Walmart tends to be the big winner there. Walmart and Costco tend to be the two biggest winners. In fact, Walmart is consistently gaining also new followers, new loyal consumer following on top of the big amount that they already received during the pandemic. And as a result, they're definitely giving competition to the likes of Amazon. They continue to add more products on their websites as a bigger offering. And in fact, Walmart was one of the few retailers that said during the last earnings call that in terms of price changes, they haven't seen much price changes from a year ago. So they're trying to maintain those prices as low as they possibly can. And therefore, they continue to gain more loyal customer following, even from the middle class and the high-end consumer that is trading down and continues to find a way to save money.
You mentioned, though, as the figures say, that Americans are still favouring spending on experiences over goods shopping. Do you think that will rebalance this year?
So it's interesting because for the first quarter, which we're already seeing like companies like Royal Caribbean smashing expectations, that earnings growth rate is expected to be nearly 25%. On top of very difficult comparisons from a year ago. Last year, they were in the triple digits. So when you see double-digit growth on top of triple-digit growth, that underlines a huge growth right there. That it tells us that demand in that area continues to be very strong coming from the consumer. Now, when we look at the forecast for the next 3 quarters, LSAG definitely shows that consumer spending in this sector will continue to be strong and will prevail. Meaning that consumers will continue to gravitate towards services, experiences, rather than things and goods at the mall.
Sharon Martis of LSEG, thank you so much for joining us. Well, that's your market insight. You can watch more videos on Reuters.com.